Hello and good afternoon. So, welcome to an episode of Trade Breakdown or Midweek review of the trades that I've taken so far in this week. So, on indices, I've taken um, two losses and one missed trade. So, I want us to go through those trades, and that was on Monday, and then on Tuesday. So, let's do a quick review. So, first of all, coming in on Monday, I said that I will be bullish for the better part of the week as I will be targeting most of the gaps and maybe buy side liquidity resting as previous week highs. So, for example, we have this, and we had this. So, and then within that price action, you can notice that we had a lot of unfilled new week opening gaps. So, we had this one, this one, this one, and this one, so forth. So, the reason I was being bullish was because we had a weekly change in state right here on this price action. So the previous week had been very bullish, and I was um so the previous week had been bullish. The previous week had been bullish, and I wanted to uh continue with that momentum to the upside and target all of those imbalances as well as the buy side liquidity resting as uh previous week highs. So that's what I was going into the market looking at. So the same thing was on US 500, which is SP500. So we had that weekly change in state, and we had imbalances that could be targeted as well as buy side liquidity in form of previous week's highs. So that being said, I went to the daily chart, and the daily chart I wasn't really looking at anything apart from maybe this daily change in state of delivery at the bottom here. So I was sure that I wanted that price action to continue. So of course I went to the 4 hour where I wanted to see if the week had opened with an opening gap which wasn't visible on a 4 hour on both assets. So you can see that it was not visible on both assets. Okay, so because this is Sunday, this is Fridays, and then this is Sunday. So I went to the 1 hour and tried to look for something. So when I went to the 1 hour, I noticed that price had opened with a NWOG, which is a new week opening gap, which I marked between Friday and Sunday's open. So that is this price action right here and this price action right here. So that is what I marked as my NWOG. So remember, when I'm doing this, all of this has not happened yet. So and then this played out now on Monday's Asian session. So we had this bullish candle, 1 hour candle that completely filled that NWOG. So as soon as that happened, I was sure that price action was bullish. Now that paired with the analysis that I've shown you on the weekly chart. So what I had was that fair value gap, that 1 hour fair value gap, and then you can see that as that session progressed, we had that rebalance, immediate rebalance, and price respected retested the consequent encroachment of that 1 hour fair value gap, and then it started to move away. So that was a very good sign that I was going to get a setup within the day to trade the continuation. So on Monday, I woke up late, so I found the London session had already played out. So I wanted to look for a trade within the New York session. So what did I do? I went and looked at the London price action, and I looked for something that can be traded into, and then we can trade the continuation of the daily bias, which is bullish. So I came and noticed that we have a 1 hour fair value gap right here, and we also have a weakless candle on that favor on that price action. So I was sure that price had to come and retest this area, because whenever you see a weakless candle, so for example, you can see a weakless candle here, a weak has to come and rebalance that area before it continues with the direction that it wants to. So as I saw that, I was sure that price was going to give me that entry, and then I was going to trade the New York AM session with that. So the 1 hour, remember all of this has not happened. So on the 1 hour, we had that. So this is what I sent in my group. I wanted price to come to this level and then displace to the upside. So basically something like this. And this is basically what we call uh, IRL, internal liquidity, to external. So that is the protocol that we label as IRL to ERL. So basically, we want price to tap into an internal range liquidity and then displace to external range liquidity. Okay, so I went down to the lower time frames now to wait for my entry, and you know, as usual, I do not take any trades on indices, especially after the New York kill zone. I have to wait for the 9:30 open because a lot of manipulation goes on, and most of the times it will come back to your entry if you had missed an earlier entry. So it's always safe to wait. Okay. So when I came to the um to the 5 minute, and I was now waiting for the 9:30 to play out. Okay, so this is the 9:30 open right here, this huge bullish candle. So you can see that we had a fake out to the upside at 9:30. So you don't buy the fake out or for the first 15 or 5 minutes 10 minutes of uh I usually say for the first 15 minutes of the 9:30 open, I do not like to trade. I want to see what price wants to do, and then when the 15-minute closes, I can now going and look for a trade. Remember, I have all these levels marked, so I knew I wanted to get some positions around this level and trade to the upside. So the 9:30 9:30 had this one, and then we traded back inside and did a sweep. So this is a manipulation candle because you can see that the wick made sure that it closed below. So first of all, the 5 minute went and closed above this, so you can see that that is a sign that we want to continue to the upside. But the 9:30 a.m. Open volatility or that shenanigan is not over. So I waited for this. We had that manipulation to the downside, and then now I marked this one as my last down close candle. Okay, so this was my last down close candle. So as soon as that was traded into on the next candle, now that becomes my change in state of delivery. Okay, so I'll just mark it as my 5 minute. My template is saved as a 15-minute because uh, I was using the 15-minute candle a lot in the recent past. So that became my 5 minute change in state of delivery, and this should be marked at the body of the candle. Okay, so yes. Okay, so as soon as that happened, I took my position when the next candle was forming this week, and that is what I shared in my Telegram. So if you are in my Telegram, you saw this. So I at the open, because there was no big difference between this level and this level, so I did not have to wait for a retest between 24,180 and 24,189. So that's only 10 handles. So that is an accepted range. Anything between below 10, I can take that without waiting for that retest. And then my stop loss had to be just below the 9:30 a.m. low. So, and then I went back to the higher time frames now to look for targets, because remember, I'm trying to target some buy side liquidity on a higher time frame. So what do we have here? I can see that we have a lot of relative equal highs, and we have this high here. So the first relative equal highs were going to be my take profit one, which was at 1.2 R, and then my final take profit was that 4 hour high, this 4 hour high. Okay, so this is what I did. Uh, Take profit one, and then I wanted to also target this 4 hour high. So those were my intraday targets, because I believe that the daily candle had not finished expanding yet, and we already had that retracement. So all I was waiting for was for us to get that expansion to the upside. Okay, so let's go back to my 5 minute chart and see what we had. um where is it where is it okay, I just wanted to say if I had missed something on the 1 hour that I had just noticed, but it's okay. It's all good. It's all good. It's all good. So, um, from my entry, we were able to displace a very good. It was a very good move at the beginning. So we were able to displace a very good move right here, around 86 handles. So we were able to displace around 86 handles before price started reversing and it consolidated around my just below my stop loss. Okay, just below my entry level. So most of this trade within my was in drawdown. I spent most of this trade in drawdown. So you can see that we had this huge candle to the downside. So the reason I did not close that trade at that point is because um we had the 1 hour looking good and the 4 hour looking good. So I just thought it was a little bit of consolidation and then we were going to continue to the upside. So that being said, this was the first trade that I took and it ended up being a loss. The trade closed at around just before the 1:30 open, so it was at 1:10 p.m. 1:10, just a few minutes to the PM session open. So which is a very common thing in these markets, and I don't know why I didn't close this trade because usually if I enter a trade during the AM session and I don't take off even take profit one, so TP1 is usually at 1:1. So as you have seen, this one lies at around 1.2 R. So usually if price hasn't displaced from my entry level at least one R, I usually close that trade when the New York AM session is closing. So I would have closed that trade where right here. So this is 11:55. So this is the candle that finished the hourly candle, the 11 a.m. hourly candle. So usually that's what I do. I close that trade at that point. But um, sometimes we break our rules and we learn the hard way. So this was one of those days, and I ended up taking the loss that I would have mitigated right here because you can see that's a very big difference. I would have mitigated that loss by almost half because this is 78 more pips, 39. So actually I would have mitigated it by at least 70%. So yeah, but that's just part of the journey. We live, we learn, and the lessons are in the losses. So this is one of them. It was there to remind me that I have a rule that whenever price doesn't displace from my entry level and it reaches the New York lunch session, I have to close the trade. Why? Because expect a sweep of the AM session lows before continuation during the PM session open on an ideal day. Okay, so let's go to the second trade that I took during the PM session. So I have been stopped out on that trade. So let's go back to the 1 hour. No, let's use the 30 minute because I want us to focus on the 1:30 open. So as I have told you before, let me write this here. We have 9:30, 9:30 to 12. That is the New York AM session. Okay, and then we have the 12 to 13:30 New York lunch session. Then we have the 13:30, 1:30 to 16:15 p.m. New York PM session. Okay. Okay. So this is the New York AM session. This is the lunch session where you do not expect to take any trades. So I do not take any trades. If I have not taken a trade within the 9:30 to 12, I do not take a trade. Even if it gives me that entry, I will not take it, because as soon as this opens, it will either sweep the lows that were formed during this session, or it will give you a re-entry if you missed a trade during the AM session. So I tend to skip this lunch session, and it's a very good thing to do. So yeah. As I was saying, I want to use the 30-minute because I want us to focus on that, because I actually took that trade on a 30-minute, but I took it on SP500, which is US 500 or ES, whatever you call it. So let's go. So remember, I have been swept out during this window. This is the, you can see that 30-minute candle. It's a very dodgy candle, so you can see that we swept and went back inside that range. So this was still giving me more confidence that we are still going to displace to the upside. Okay, I was still very confident that price was going to be bullish. Where is it? Where is it? Where is it? Where's that candle? Where's that 1 p.m. candle? So yeah, this is the candle. Yeah, so you can see that we swept this AM session lows and then went back inside that range. So as soon as I saw that on the around maybe even the 15-minute, I was pretty sure that price was going to displace to the upside. So I looked at the other asset, because remember, these are correlated assets, so you have to keep checking them. Even on the other trade, I had to confirm that they are moving in sync. Maybe I didn't show you that, but I'll show you as soon as we go to that asset. So you can see that uh, we did that sweep right here. So you can see that we have swept that liquidity. That is the AM session lows were swept. So as soon as I see the AM sessions, oh, the AM session lows have been swept, I went to the other asset to see if the same thing had happened, and guess what? It had not happened. So that became a bullish SMT. That is what we call a bullish SMT. Let me show you real quick, and that is how I ended up taking that trade on SP500. So this is the AM session low on US 500, and you can see that it was left open while it was swept on the other asset. Okay, maybe I should just add another the tab here just to make this navigation easier. I like having Nasdaq on my first tab. Okay, so 15 minutes. Where were we? Yes, I was showing you the SMT that was present. So SMT basically is when a low is swept or a high is swept on another pair, and the other correlated asset is left open. So you end up having a lower low and a higher low on the two. So that became an SMT, a very powerful SMT while at that. So this is the 15-minute, and yeah. So I changed this from, it's still a liquidity sweep, but I now change it to SMT just to have that on my chart. And so yeah, now going to how I took that entry. So as usual, I took the trade on US 500 because it was the one that had is stronger in terms of bullishness, because you see the fact that it's not sweeping it lows means that it will keep forming higher lows, higher lows, higher lows, and that is what you want to see in a bullish market. You want to enter the trade on the asset that is forming higher lows, instead of the one that keeps sweeping its lows, because your stop losses will be set on the just below the just below the lows. Okay, so you want to go with the one that is forming higher lows, higher lows, higher lows, higher lows. Okay, so I took the trade on this particular asset. So in this series of last down close candle, this was my change in state of delivery, because this is the last down close candle on a 15-minute. So on the 15-minute, I usually don't use the series. I just use the last candle. Okay, so that is a 15-minute change in state. We reduce that to that, and I'll have to save this template Actually, let me save it right now. Right now. Okay. So yeah, yes, I want to replace. Okay, yeah. So as soon as that happens, if you see M session being lows being swept in an ideal situation, this is supposed to play out very well. Okay, so we got that retest, so forth, but I took it on a 30 minutes. So for the sake of those who are in my group and remember it, I took it on a 30 minute, because on a 30 minute we had a single down close candle. Okay, this one is just within this one, so this is the last down close candle that printed that move. Then it becomes a 30-minute change instead. 30-minute CIST. Then as soon as that happens, I place my low just below this low, because this is a protected low. You see, it formed a higher low, so I do not expect to see price coming back to sweep that low. Okay, and then my targets were still the same from morning. I had the 4-hour targets. Okay, we have this high. Oh yeah, we have this high here, right here. That is what I want to see getting swept at first. That is take profit one at 1.4R. You can see it written here. So that is 1.4R, and then I wanted to see price rally even higher and take out, where is it, there. So that is 3R, but mainly I just wanted to see especially this one getting swept, and then maybe take partials or know if I want to collapse all of the trades. So that was my next entry, and then again this was topped out, and it was I left this position overnight. Okay, so it was swept on the next day, during the open of the next day. No, it wasn't swept during the open. It actually lasted a few hours after the open. So it lasted a few hours after the Asian open, and we I was finally stopped out. So this was my second trade on Nasdaq, and that is why I told you I had two losses and one missed trade. So I think I've explained the logic behind these trades that I was taking. So for this one, I don't know if I would have closed it earlier. Let's see. I entered that trade at around 2:30. So during the close, we had a very nice reaction to the market. So I do not see any reason to close it. I decided that I was going to leave it overnight, because you can see that we had left this relative equal highs, this and this high at the close. So I was expecting that that was going to be swept when we were going to, during the Asian session. I expected that rally to the upside, but that wasn't the case. Price wanted to first sweep these previous day low, previous PM session lows and so forth before it continued to the upside. So I think let's move over to the missed trades, the trades that I missed. So the trade that I missed was on Tuesday, and it was actually the long setup that I was actually looking forward to trading from Monday. Okay, so I have explained why I'm bullish from the weekly to the daily and so forth. So remember, I've been stopped out on Monday. So now coming in Tuesday, I'm coming in with a clean chart. I want to see a clean chart. So I have to clear my drawings, and that's what we'll do. Where is it? The only thing I won't clear is the NWOG, new week opening up, because it's still an important level within that week's price action. Okay, so on Tuesday, coming in now on Tuesday, I find out that I have been stopped out during this rally to the downside. So now I'm interested to know where price is headed if I have been stopped out twice. So it means that there is something that price wants to retest before we go to the upside. Where is that? Where are we? Where are we? Where are we? What the hell? Okay, maybe I should keep those targets open, because they're still the targets that I wanted to see being taken. So yeah, let's keep them open. Okay. So as I mentioned, I wanted to see price. Now I'm interested to know where price is going, and then I've also noticed that on the 4 hour I have a change in state to the downside. Okay, on both assets. So I'm interested to know what could price be going for. So when you are looking for what price could be going for to the downside, you look at two things majorly. Okay, you look at imbalances and swing lows and swing lows. Okay, imbalances, swing lows, and swing highs. So in this case, what we had was our NWOG, that is the new week opening gap. By now, everyone who's following me knows what an NWOG is and an NDOG. So that is a new week opening gap. So here that NWOG. I won't draw the 4-hour favorable gap because we have that NWOG covering that part of the perception. So even here, I'll delete it and just extend this. Use the 1 hour. Then we can get into that very beautiful price action that occurred in there. So yes. So let's go back to the 4 hour. All right. So I have been stopped out twice on Monday, and then coming in on Tuesday, I noticed that we have this. So this is where Tuesday started right here. Okay. So coming in, I noticed that we have this change in state of delivery right here on the 4 hour on Monday's price action. So we have it on both assets. So my next question was, what could price be going for? And as I have mentioned, you want to look at sell side liquidity and an imbalance. So in this case, we had both of those. So we had, let's go back to the 1 hour now so that we can mark out the levels that I was looking at. And I shared this, all of this I did it before the market played out. So this is not hindsight. By any means, this is not hindsight. So this was sell side liquidity. I wanted to see it taken out before now we trade to the upside because I was sure that I wanted to see price rally to the upside. The only thing was there was something that price wanted to fetch before it went to the upside. So I marked that sell side liquidity, and then the NWOG was still marked on my chart. I mean, not open, but price can always retest those levels. And then we had this weekly what I actually mentioned this in the live TikTok that I did. Mentioned that I would want to see some form of SMT if price will go down to this level. So this is sell side liquidity still, which is the was the current weekly low. So I if it would have been swept on both assets, I would have known that price has changed direction. But if it's swept on one and left open on the other, that's a very bullish SMT, which is very good to trade with. Okay, so let's go in and dig into that price action. So the reason I missed this trade was because I wanted to see price come tap this new week opening gap and respect it. But what did price do? Price came and uh, closed below the 50% of that and even went lower to sweep the current weekly low, which was the current weekly low at the time. So the thing with correlated assets is that one of the assets is allowed to do that. One of the assets is allowed to do that. It's basically it's given the permission to do such things. So when I saw that US 500 it came, swept dipped into the NWOG, but it did not sweep this. That immediately became an SMT for me. Okay, so this was an SMT. So I'm almost getting to the part why I missed this trade, and I don't know if I should be mad at myself or how I should feel about it, but I really just think it wasn't an ideal situation to trade in. So that's why I actually missed it. So, okay, let's look at the time. Now, this is at 11. So, this officially becomes the New York lunch session. So, of course, I do not take any trades during that time window. So, that happened during that time window. We had that sweep and then New York lunch session started. and we formed this wickless candle. Okay, so at the during the PM session open, what I wanted to see was this fair value gap be respected, because remember, we have an SMT. Okay, where is it? 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 Let's make it lighter. Yes. So remember, we have retested my key levels. The NWOG, we have formed an SMT between this low and this low and the other asset, US 100. You can see lower low, higher low. Okay. So what do I want to see? I want to see this fair value gap, because as soon as we get this is a hourly change in state of delivery immediately after that purge in the NWOG. So I wanted to see the fair value gap, the hourly fair value gap that has been formed, being respected by the next candle that was going to dip into that and give me an entry. So actually, I wanted to take my entry somewhere within that fair value gap on a lower time frame and place my stop loss just below this this low. This is a protected low, because an SMT low should be a protected low. And then, as usual, I was going to target the, where did my levels go? Thought we left them open. So I was going to target the same targets that I had on what? So that was going to be TP1, then take profit 2 right here. So two things made me miss that trade. First of all, was that hourly fair value gap. When this candle filled this hourly fair value gap fully, fully like this, when that hourly candle fully filled that fair value gap on both assets, I was convinced that price was not going to go to the upside. Another issue, we had this inverted fair value gap. Okay, we had this inverted fair value gap right here on both assets. So this becomes an IFVG. So I think there was a lot going on in the markets, and I wasn't willing to risk. Uh, Actually, considering that I had lost the previous day, I wasn't willing to risk any any more unsure trades. Okay, so this was not an A plus setup, but it played out like an A plus setup. So I was expecting this hourly fair value gap to be respected, and then I wanted to see price come and disrespect this inverted FVG. So when that did not happen, so you can see the opposite happened. We respected this, we were respecting this IFVG, and then we completely filled the hourly fair value gap on both assets. So this is the hourly fair value gap that I use to take my entries sometimes. So as soon as that was filled completely, I was sure that no, this trade is not for me. And then, so another thing, you remember this was on Tuesday 7th. So Trump was had mentioned that he was going to bomb Iran during what the next morning. So that paired with all of that price action that I'm explaining right here, the IFVG, this fair value gap being filled, and the risk of Trump doing those atrocities to Iran, I decided to stay out of the market. But the market, the trade, the setup played out very well, because assuming now I had taken that trade, I would have taken it on SP500. So let's see how I would have taken the trade if, but no, I wouldn't have taken that trade. I just think that is a mistrade, and it is what it is, because both targets were hit, of course, which is around 3.1 R. So assuming maybe I took it even a little bit higher right here, because that is where we have that series of down close candles. That is still a very good trade, 1.7 R, and with a trailing stop loss, it makes it 2.7 R. But let's stick with the 1.8. So yeah, basically that was the trade that I missed, and I would say that Trump had a major uh, major impact on the decision I made on whether to take the trade or not. I wasn't comfortable being in the setup if Iran was going to be bombed, because if that happened, we would have expected this to crash, because that would have been some sort of World War III starting. So I would have expected the stocks to fall massively. So yeah, those are the trades that I missed on US 100, 500, and the trades that I took from Monday. So we have been majorly in a consolidation. So I haven't even shared any setup on anything, because this is just shitty price action, and I expect a manipulation probably to the downside. We can dip around here. So this is a consolidation. As usual, we get accumulation, manipulation, and distribution. So yeah, this is an accumulation. So I would expect price to manipulate to the downside, maybe hit this end dog. We have a new day opening up between Tuesday and what? Tuesday and Wednesday's open. So price could dip into that, and then we can displace to the upside. Or because we can expect price to come here, we can expect maybe price to manipulate to the upside, sweep this high, and then we can displace to the downside. So that will majorly be determined on the daily candle. So I think I'm just done for the week on US 100 and 500. So the rest of the week I might just be trading gold, but I will update you in case of anything. I'll share the chart in my Telegram channel. So if you haven't joined that yet, the link is on the description of this video. Thank you for tuning in. For gold, I'm doing a separate video, so check it within my YouTube. Yeah, have a nice time. Thank you for tuning in.